Hello, and welcome back to Wall Street Training's basic merger modeling course. Wall Street Training provides financial modeling, valuation modeling, mergers and acquisitions, merger and leverage buyout modeling training to corporations, as well as through public open enrollment seminars and self-study video-based learning. My name is Hamilton Lin, President and Founder of Wall Street Training, and I will be your instructor throughout this course. My background is in investment banking and mergers and acquisitions, having worked at Goldman Sachs' Investment Banking Research, Bank of America Securities' Mergers and Acquisitions Group, several other smaller boutique investment banks, again all focused on mergers and acquisitions. I'm a CFA charter holder as well as a CFA instructor. The goal of this course, the basic financial modeling course, will be to build an accretion dilution analysis, generate an ability to pay analysis, as well as a simple merger modeling, snapping together two income statements, selected balance sheet items, and cash flow sweep for debt payments. At the end of this course, you will have the ability to quickly understand the basics of merger modeling in Excel. To maximize your learning in this module, you absolutely need to make sure you understand the concepts in our M&A deal structuring course. In particular, Section 2 and Section 3 of that course, in which we talk about stock versus cash consideration, as well as stock versus asset deals and the tax implications, as well as Section 3, the accretion dilution walkthrough. As always, we will be extremely keyboard and shortcut oriented to speed up your number crunching so you can spend more qualitative time to properly analyze and interpret your quantitative results. Before you get started, again, take the time to first please change your background to gray and install the Wall Street Training add-in macros to become even more efficient in Excel, and just simply refer to our video instruction and handouts for more information. This course does assume you have a basic understanding of accounting, financial statements, knowledge of Excel, and fundamental concepts of finance and valuation. Prerequisites to this course include our accounting and financial statements integration module, company profiles, corporate valuation, our company overview, and the basic financial modeling course, as well as, importantly, the advanced financial modeling course, building the core model so you can understand the debt sweeps, as well as, more importantly, and most importantly, the M&A deal structuring course. We will first start off by analyzing Walmart acquiring Target, and later on, we will make up two companies and slap them together in our simple merger model. Please have the hard copy of the Walmart Target information file that's been provided to you. Let's now turn our attention to calculate our actual accretion dilution. In cell E41, what was my starting earnings per share of my acquirer? Well, that was going to be cell D13, C13, F for that for me, $2.72. You can tell we're 3 cents accretive. So once we got E41, the starting EPS, let's go ahead and get our transaction EPS, our pro forma EPS, $2.75. Just bring in the same number so that we have it next to each other. E43 will say, let's calculate our dollar accretion. In this case, one can clearly see that we are 3 cents accretive. Accretive will have a positive sign. If it was negative, it would be dilutive. So clearly you would take this 275 minus the 272. So let's go ahead and do that. E43 will say equals E42 minus E41. What is the percentage accretion dilution? Well, we just want to calculate the percent change between these two numbers, which you can do 275 over 272 minus 1. But since we kind of already calculated that, the 3 cents, let's just take the 3 cents divided by the 272, algebraically the same. E44 will say equals 43, E43 divided by E41, 1% accretion. Now, let's calculate the after-tax synergies required to break even, or the cushion. What does this mean? That's a mouthful. Let me zoom out so you can see the numbers. What we're saying at this point is the following. What we are saying is that we are accretive by 1% or 3 cents. Well, I want to know what's the cushion that I've got, how much do I, quote-unquote, have to lose, 3 cents, before I go to break even 0. Normally speaking, the synergies is the number that we need to break even, so that's the positive number. So the cushion will be negative. So what's the logic here? We're going to say that we have 3 cents of buffer. How much is that on a net income after tax equivalent? It will be our 3 cents times our pro forma shares outstanding. Then we want to calculate our pre-tax synergies. So we're going to take that whole number in this cell now, and we're going to divide the whole thing by 1 minus t, reversing a pre-tax, after-tax calculation, to calculate the pre-tax synergies or the cushion required to break even. So now, in cell E46, we will say equals negative 3 cents, E43, let me zoom this in for you, equals negative 3 cents, E43 multiplied by my shares outstanding, pro forma shares outstanding, E28. I have $133 of net income buffer after tax before I go to zero break even. That's a cushion. E47 equals that number on top, E46, divided by open paren 1 minus my tax rate, which is going to be cell I6. F4 that for me, please. Double tap enter, negative 205. Here's the formula once again. Now we're almost done. I want you to go ahead and take all of these numbers from E47 all the way up, Control Shift up arrow, shift up to E20. Now, you notice that we have a box, our pre-formatted box. We're going to lose that when we hit a Control R. So you can do a Alt ESF, but I'll show you something else. Let's do the Control R. And I want you to now select that whole thing. Shift right, column I, Control R. Cross your fingers. Do your numbers match? I hope they do. If they don't, it's because you screwed up when we anchored. So, fix it. Go back, rewind the video if you don't match the numbers that you now see on the screen. Because you need to fix the hard code anchoring somewhere in column E, then you can just Control R all of that across. Now, let's get my pretty box back. Go to I-44. I'm going to zoom out so I can do the whole thing. Go to I-44. Shift up, then shift home to select that whole block. Now, hit Control Shift 7, which automatically puts a box around your selection. That's a default Excel shortcut. If you want to say, let's get rid of the border, Control Shift _ gets rid of all borders. Control Shift 7, get my box back. Okay, so that's a nifty little shortcut there. So now, folks, we are done building our model. Let's quickly change some of our inputs so we can see the break-even points and that I'm not blowing smoke to you. So let's go modify our deal structure. I'm going to zoom this in for you. And I want you to match my inputs now. I'm going to go to my pre-tax synergies as a percent of operating expense, and I'm going to make this 0. In fact, I'm going to highlight this whole section in yellow right now, just so that you can make sure you match exactly. Let's start with our cash. Let's make it a 100% cash deal. No goodwill amortization, no 338H10 election. Please, please take the second now to match this deal structure. And now, once you do that, you will clearly see that in column I, 6506, 25.5, very close to our 25.6 PE ratio. Very close to that. The difference is due to our options. That you have exactly, by the way, no stock issued, no synergies, no goodwill, 338, all interest, 0% accretion dilution. Let's now do the same thing for the 100% stock deal. I would like